In this video, we will learn how to post journal entries to ledger accounts. Posting is the process of transferring entries from the journals to the ledger accounts. Posting to the ledger is the classifying phrase in accounting where the effects of journal entries are recorded into individual accounts. Posting should be made on a timely basis to ensure that the ledger is up to date. In accounting, a general ledger refers to a book that consists of all accounts used by a business. It has debits, credits, and the resulting balance. The standard format of a ledger has 6 columns. The account name and the account number appear on top of the table. The first column is the date column, where we record the date of the transaction. The second column is the explanation column. This column of the ledger account is used infrequently because an explanation already appears in the journal. The reference column of a ledger indicates the journal page from which the transaction was posted. In the debit column, we record the debit amount shown in the journal, and in the credit column, we record the credit amount shown in the journal. In the balance column, we enter the balance after considering the debits and credits of the account. The balance of each account holds financial information that is used to create the income statement and balance sheet reports. Let us now look at a few transactions to see how journal entries are posted to the general ledger. Selected journal entries for Henley Company have been presented below. We are required to post these journal entries to the standard form of account. On May 5th, a client was billed for services performed. In the journal, accounts receivable has been debited for $4,500 and service revenue has been credited for $4,500. Since 2 accounts, accounts receivable and service revenue, are involved, these 2 ledger accounts will be affected. First, we post the entry to the account which has been debited, which in this case is the accounts receivable account. In the process of posting, we will first enter the date of transaction in the date column and enter the journal page, which is J1 in the reference column. Then we enter the amount of $4,500 in the debit column, which results in a balance of $4,500. Similarly, in the service revenue ledger account, we first enter the date in the journal page. Then the amount of $4,500 is entered in the credit column, which results in a balance of $4,500. On May 12th, the company received cash in payment of account. In the journal, cash has been debited and accounts receivable has been credited for $2,900. The cash and the accounts receivable ledger accounts will be affected by this entry. In the cash ledger account, once the date of transaction and the journal page is entered, we enter the amount of $2,900 in the debit column, which results in a balance of $2,900. In the accounts receivable ledger account, the date of transaction and the journal page is entered, after which the amount of $2,900 is entered in the credit column of the account. Note that accounts receivable is an assets account and has a normal debit balance. When the account is credited, its balance is reduced by that extent. Thus, the balance in the accounts receivable ledger account decreases to $1,600, which is the difference between $4,500 and $2,900. On May 15th, the company received cash for services performed. In the journal, cash has been debited for $3,500 and service revenue has been credited for $3,500. The cash and the service revenue accounts are the accounts affected here. In the cash ledger account, after recording the date and the journal page, $3,500 is entered in the debit column. This increases the balance to $6,400, the sum of $2,900 and $3,500. In the service revenue ledger account, after entering the date and the journal page, we enter $3,500 in the credit column. This increases the balance to $8,000, the sum of $4,500 and $3,500. This is how the journal entries are posted to the ledger.